Hi there. Holy smokes, we've had so much economic news going on lately that I wanted to get you a quick update, especially this week after the election and after today's Fed meeting finished up. So, as you probably heard, they did drop interest rates, the Fed funds rate, by a quarter point, which was the forecast. And so, I wanted to just give you a quick update and recap of where we've been. So, as you remember, probably in mid-September, the Feds did release that they were reducing the Fed funds rate by half a point. That did happen. We kind of knew that that was the forecast going up into that date. So we saw mortgage bonds have higher demand, which meant interest rates went down all the way leading up until about that Fed meeting. But shortly after that, we actually saw interest rates go up quite a bit, and that's because the demand for the mortgage bonds were going down. So when that happened, we saw the rates go up, and then going into this last week, so on Tuesday, and then yesterday with the announcement of the election, the stock market actually went up, which also has an impact on the mortgage bond market. So interest rates actually got a little bit worse yesterday, but today the Feds did announce that they are keeping with that quarter point reduction in the Fed funds rate. So we've seen some positive movement today. Nothing massive yet, but you can see each of these lines represents a candlestick, and that's one day in the market. So when we have a tall candlestick like that, there is quite some movement. Going into, and I'm going to kind of show you where we are today. So this is rates as they are now, 30-year, as of this change that happened after 1 o'clock today, we are just below now the 7% mark. Of course, this is an average, so it's going to be different for all types of loans and how much you're putting down and everything, but this is where we are today. 15-year a little bit lower than that, and then the jumbo is a little bit higher than that, but this is where we are as of now, so I wanted to get you that update. And then I wanted to look at this with you. This is a dot plot, and or a plot map, and what that is, there's 19 voting Fed members, and this is where what happened today, where now the Fed funds rate is like between 4.5 or 4.75 and 5.0 is what it was before today, and now it's just under that amount. So this is where those voting members voted. Today it actually ended up being a unanimous vote for that quarter point reduction. But going into next year, this is what I wanted to show you. It is highly likely that we're going to be dropping interest rates about a full point next year. Now, we never know, things change all the time, but that is the likelihood. So I'm still going to be watching the market, giving you feedback, giving you input. The nice thing is it looks like it's going to be a slow movement down, so no crazy movement quickly. But we are hoping over the next few Fed meetings that we're going to start seeing some reductions in the Fed funds rate, which will, it's not a direct impact, but which will impact interest rates eventually to go down. So I just wanted to get that to you. I hope this finds you well. Let me know if you have any questions, and have a great day.